I think what I would tell you is that the bigger principle, and we've talked about this a lot, Jason, is that in capitalism, when you over-earn for enough of a time, what happens is competitors decide to try to compete away your earnings. In the absence of a monopoly, the amount of time that you have tends to be small and it shrinks. So in the case of a monopoly, for example, take Google, you can over-earn for decades.
Chamath Palihapitiya explains that in capitalism, high profits attract competition unless a monopoly protects them, as seen with Google. Nvidia is now experiencing massive earnings, raising the question of who will compete to erode its dominance. He highlights that AI demand is driven by big tech companies leveraging their balance sheets, but much of this demand supports experimental apps rather than impactful, revenue-generating products. The challenge is turning massive investments into sustainable returns. Looking forward, true innovation often comes from smaller players creating transformative applications. While Nvidia's growth may continue, its long-term valuation depends on shifts within the tech stack and how value moves to the application layer.
And it takes a very, very long time for somebody to try to displace you. We're just starting to see the beginnings of that with things like Perplexity and other services that are chipping away at the Google monopoly. But at some point in time, all of these excess profits are competed away. In the case of Nvidia, what you're now starting to see is them over-earn in a very massive way. So the real question is, who will step up to try to compete away those profits? The old Bezos quote, right? Your margin is my opportunity. And I think we're starting to see, and you've mentioned Grok, who had a super viral moment, I think, this week. But you're starting to see the emergence of a more detailed understanding of what this market actually means. And as a result, who will compete away the inference market, who will compete away the training market, and the economics of that are just becoming known to now more and more people. I would like to tie it together with Friedberg's point. So at some point, all of this spend has to make money, right? Otherwise, you're going to look really foolish for having spent 20 and 30 and $40 billion. So Nick, if you just go back to the revenue slide of Nvidia, I can try to give you a framing of this, at least the way that I think about it. So if you look at this, like what you're talking about is, look, who is going to spend $22.1 billion? Well, you said it, Jason, it's all big tech. Why? Because they have that money on the balance sheet sitting idle. But when you spend $22 billion, their investors are going to demand a rate of return on that. And so if you think about what a reasonable rate of return is, call it 30, 40, 50%, and then you factor in, and that's profit, and then you factor in all of the other things that need to support that, that $22 billion of spend needs to generate probably $45 billion of revenue. And so, Jason, the question to your point, and to Friedberg's point, the $64,000 question is, who in this last quarter is going to make $45 billion on that $22 billion of spend? And again, what I would tell you, to be really honest about this, is that what you're seeing is more about big companies muscling people around with their balance sheet and being able to go to Nvidia and say, I will give you committed pre-purchases over the next 3 or 4 quarters, and less about, here is a product that I'm shipping that actually makes money, which I need enormous more compute resources for. It's not the latter. Most of the apps, the overwhelming majority of the apps that we're seeing in AI today, are toy apps that are run as proofs of concept and demos and run in a sandbox. It is not production code. This is not, we've rebuilt the entire autopilot system for the Boeing, and it's now run with agents and bots and all of this training. That's not what's happening. So it is a really important question. Today, the demand is clear. It's the big guys with huge gobs of money. And by the way, Nvidia is super smart to take it because they can now forecast demand for the next 2 or 3 quarters. I think we still need to see the next big thing. And if you look in the past, what the past has showed you, it's the big guys don't really invent the new things that make a ton of money. It's the new guys who, because they don't have a lot of money and they have to be a little bit more industrious, come up with something really authentic and new.
Yeah, constraint makes for great art. Yeah.
We haven't seen that yet. Yeah. So I think the revenue scale will continue for like the next 2 or 3 years, probably, for Nvidia. But the real question is, what is the terminal value? And it's the same thing that Sachs showed in that Cisco slide. People ultimately realized that the value was going to go to other parts of the stack, the application layer. And as more and more money was accrued at the application layer of the internet, less and less revenue multiple and credit was given to Cisco. And that's nothing against Cisco because their revenue continued to compound, right? And they did an incredible job, but the valuation got cut.
Nvidia has stalled a bit from its highs above 153. If you look at the chart, it hit 153.13. It's come down a little bit off that, now starting to firm up here around 137. It's almost trading 139 now this morning, up a full percent. So what do we look at Nvidia? This is still a company that the AI-driven growth of this company is unmatched by anyone. It's virtually the whispers of monopoly are all over this because no one can seem to close the gap. But regulatory problems are on the horizon, and customer needs are shifting, and what is going to be the future? What inning is Nvidia in? There's all the concerns about Nvidia that have caused it to stall up here. Remember, it hit 140 for the first time. Last June is the first time it closed. It traded 140, and it's still trading right around $140. So it's been range bound now for quite a while, even though earnings are still expected to grow 55 to 60% through full year 2026. This is a company still in the early stages. And then here's the question that everyone has to answer. What's in the pipeline for Nvidia? Are they getting into healthcare? Are they getting into other companies? What's the next thing? Much like we talk about with Tesla, what's in the pipeline for Nvidia that we don't even know about yet? We know there's a chip behind Blackwell, right? So the way we want to trade this is quite simple. We're going to do the long call diagonal buying. We're going to give ourselves some time going out to February 14th, buying the 139 call, kind of at the money call, then selling this week's January 24th, 144 call. All I did, basically, whenever the stock's trading, buy the at the money, about a month out, sell, look at the expected move, which for this week is about $4.50, $4.30 to be exact, and sell that short call. Use that as the long call diagonal. That's the look we're doing in Nvidia. Now, it gives you about 37 long deltas. It's collecting theta each day. That number will pick up, and you're looking for a move up towards the 144 strike. Now, if it gets up there, remember, you're spending $5.30 is where we put it in. It's trading about $5.20 now. That's more than the width of the strike. So you have to be a little careful. If it gets up towards that short strike, you either want to close the trade or make an adjustment on your strikes. So make sure you understand that call diagonal. So the risk is the amount paid. Whatever the debit is, there's your risk on the trade. So you're looking for a move from where it is now up towards the 144 strike in Nvidia. Like I said, about 37 deltas per trade. All right, those are our trades today. A short iron condor in Netflix ahead of their earnings and their inflated implied volatility, but one with a little attitude, giving you a little bit long delta and then a long call diagonal in Nvidia. That's our show for today. That's all for Daily Trader. We'll see you tomorrow with another edition of Daily Trader. I'm Kevin Hinks.
We have gone pretty far already, and particularly in certain sectors and so on. But the biggest influence is going to be what I'm talking about. Because if you have those multiples and you have a rise in interest rates,
right? Okay,
you will have a pop.
Mm-hmm.
So as we focus on that deficit question, but yes, of course, it's fragmented. I think that it's of course led by the sectors that are great sectors, the disruptors, the AI and so on. I don't think it's been carried down to the applications of AI. In other words, the uses of AI.
Right.
So if you're watching, as I'm watching around the world, and by the way, it's very interesting, what's going on in China with AI in terms of applications, other places. The applications of AI are under discounted, I think. And then, of course, what is the multiple? The multiple is an extension of the interest.
Nvidia's current success in the AI market is being challenged by growing competition, especially from big tech and innovative newcomers. While the company is seeing massive profits now, the question remains whether it can maintain its dominance as AI applications evolve and new players emerge. Additionally, while Nvidia's growth is expected to continue in the short term, its long-term value is uncertain, with concerns about shifting customer demands and regulatory pressures. Will Nvidia be able to sustain its leadership in the AI market amidst increasing competition? How will Nvidia adapt to the changing landscape of AI applications?